Imagine walking outside on a clear night, looking up at the stars and seeing a perfectly straight line of glowing dots gliding across the sky. For a split second, it feels like something out of a science fiction movie. But then you realize it's a train of Starlink satellites, a literal web of internet infrastructure orbiting hundreds of miles above your head. For years, if you wanted to own a piece of that sky, you simply couldn't. You were locked out. The average person can only sit back and watch as a single private company systematically took over the global space industry. But recently, everything changed. We just witnessed the largest initial public offering in human history, throwing open the gates to a private kingdom and creating a financial phenomenon unlike anything Wall Street has ever seen. Most of us are used to a very specific kind of investing. We look at companies that design smartphones, build social networks, or write accounting software. We study quarterly earnings reports, look at price-to-earnings ratios, and try to guess if a company will sell 5% more widgets over the next 3 months. It's a game of incremental gains and predictable boundaries. But when you look at SpaceX stock, your brain has to completely shift gears. This isn't just a company, it's a multi-trillion-dollar ecosystem that functions more like an independent economic superpower than a traditional business. Trying to value it using normal stock market rules is like trying to measure the depth of the ocean with a school ruler. I spend way too much time thinking about market dynamics, human psychology, and why certain assets capture the collective imagination of the world while others just fade into the background. If you've ever wondered how a company that was valued at a few $100 billion not long ago suddenly became a multi-trillion-dollar public juggernaut, or how this single stock completely reshapes your understanding of risk and long-term wealth, this is for you. Before we look at the mind-boggling numbers behind the recent public debut, let's talk about the psychological shift that happens when a company like this moves from a private playground to the public market. When you buy a standard stock, you're usually buying history. You're buying a proven track record of cash flow and slow, steady growth. But for the longest time, SpaceX was the ultimate forbidden fruit of the financial world. The only way to get a piece of the action was through exclusive, highly restricted private tender offers. These were short windows, happening every 6 months or so, where insiders and early employees could sell a tiny fraction of their shares back to the company or to ultra-wealthy institutional buyers. It was a shadow market where the valuation quietly doubled from $350 billion to $800 billion in a matter of months. That extreme exclusivity created an intense, almost primal sense of fear of missing out among regular investors. Every time a new private valuation was reported, the rest of the world felt increasingly left behind. But now that the ticker symbol is officially live on the NASDAQ, the reality of what this business actually is has come crashing into the public eye. It turns out that it is far more complex than just a rocket company. To truly understand this stock and why it commands such an unprecedented valuation, you have to realize it's actually 3 completely distinct businesses hidden under one roof, each operating with a totally different economic engine and risk profile. The first engine is the one everyone sees on the evening news, the space launch business. This is the heavy muscle, the physical foundation of the company. It's the Falcon rockets and the massive Starship launch system. For decades, the aerospace industry was a bloated, expensive world dominated by government contractors who spent billions of dollars of taxpayer money to build a single rocket, launch it once, and let it crash into the ocean forever. SpaceX completely broke that model by proving that multi-million-dollar rocket boosters could steer themselves back to Earth, land on robotic drone ships, and fly again a few weeks later. Today, they have established a near-total monopoly on commercial spaceflight. But here is the paradox that surprises most people. As impressive as landing a rocket looks, the launch business itself isn't where the true exponential wealth is created. It is a capital-heavy, asset-intensive operation that serves as a loss leader for something much bigger. That brings us to the second engine, which is the actual cash machine of the entire operation, Starlink. This is where the business transforms from an engineering project into a high-margin, global consumer subscription empire. Think about the economics of traditional telecommunications. Standard companies have to spend immense amounts of capital digging trenches, laying fiber optic cables, and building cell towers just to connect a single city. Starlink completely bypasses the Earth's geography by blanketing the globe from low Earth orbit. By scaling to over 10 million active subscribers across more than 100 countries, Starlink has turned space into a predictable, recurring cash generator. It's an annuity that prints money while providing critical connectivity to maritime fleets, commercial airlines, rural communities, and military defense networks. It is this high-margin revenue stream that gives the company the financial runway to fund its grander, long-term ambitions. But then there's the third engine, the massive wildcard that completely rewrote the financial playbooks and pushed the company's valuation into the trillions. Earlier this year, the company completed a stunning all-stock merger with xAI, absorbing a massive artificial intelligence venture directly into its corporate structure. Suddenly, a space and satellite company became a massive AI infrastructure company overnight. Those thousands of satellites orbiting the Earth aren't just sending internet data down to houses, they are evolving into a distributed orbital computing network. The massive supercomputers on the ground are trained on unique datasets, creating a tightly integrated loop of physical launch capability, global connectivity, and artificial intelligence. It's a combination that has left traditional Wall Street analysts scratching their heads trying to figure out how to value a company that defies every existing industry classification. This unique combination explains the utter madness of what happened when the stock officially hit the public market on June 12th. The historic IPO priced at $135 a share, valuing the combined entity at an astonishing $1.77 trillion. It was immediately the largest public offering in human history. Within days, a massive wave of retail euphoria mixed with aggressive institutional buying sent the stock skyrocketing to a record high of over $225 a share. For a brief moment, the company's market cap surged past $2 trillion, overtaking some of the longest-standing tech giants on the planet. It was a spectacular display of market momentum, driven by pure confidence in the overarching vision rather than traditional financial metrics. But the public market has a brutal way of forcing a reality check on even the most revolutionary companies. Shortly after that breathless initial peak, the stock experienced a sharp pullback, declining down to a more stable range around $170. This correction shouldn't come as a surprise. When analysts finally got their hands on the official regulatory filings, they saw a massive financial tug-of-war happening behind the scenes. Yes, Starlink is highly profitable, but the astronomical capital expenditures required to build out the Starship fleet, launch thousands of new satellites every year, and fund massive AI compute centers have resulted in significant net losses on a traditional accounting basis. The company is burning through cash at a rate that would terrify a normal business, relying on its massive scale and debt markets to keep the engine running. This creates a fascinating psychological dilemma for anyone looking at the stock today. If you try to evaluate this company using conventional financial formulas, it looks dangerously overvalued. It trades at a multiple of trailing revenue that makes no sense in a traditional portfolio. Critics and short sellers look at the chart and see an asset fueled entirely by hype, narrative, and the volatile public persona of its leadership. They argue that a single systemic failure in orbit or a shift in government contracts could wipe out hundreds of billions of dollars in market value in a single afternoon. But the people who buy and hold this stock aren't looking at a spreadsheet of next quarter's earnings. They see a company that has effectively built an unbreakable moat around the future of human infrastructure. If you believe that the next few decades of global economic growth will be defined by orbital networks, automated space logistics, and integrated artificial intelligence, then this stock isn't just a regular equity investment, it is a sovereign-level asset. It is the only vehicle on Earth that allows an everyday investor to own a direct piece of the infrastructure underpinning the next industrial revolution. Navigating a stock like this requires a total transformation in how you think about risk and time horizons. It forces you to look past the daily noise of the financial news cycle and ask yourself a fundamental question. Are you investing in the world as it exists today, or are you investing in a future that still sounds like science fiction? The volatility is going to be intense, the headlines will be loud, and the valuation will rarely make sense to traditional economists. But that is the price of admission for owning a piece of a company that isn't trying to compete within an existing market, but is instead actively building a completely new frontier. In this environment, the wildest rides require the most patience, and the true value isn't found in the daily ticks of the stock price, but in the quiet, steady unfolding of a multiplanetary future.